Hi, Janine here. Well, the last few months, and in particular the last few weeks, have been extremely painful when we think of market valuations. Most of the big indexes are approaching drops of 20%. That's pretty frustrating, and I certainly feel that way. We anticipated market volatility months ago, and it just didn't happen at the rate we expected. And here we are, where it seems to defy logic, happening much later than planned. Right now, it makes sense to question everything when investing in the markets. In fact, I am analyzing and overanalyzing every market move, considering changes to better manage portfolio constantly. In fact, it usually keeps me up at night. However, I did choose experts in this field to help with stock selection, rebalancing, and managing the risk. We do know sometimes that markets tend to overreact. And the most important role I play is to really help figure out how portfolios can work for you, what you need, what you can tolerate, and recognize those big swings can happen. By understanding you, I'm trying to highlight the pros and cons when we take the different steps. What does that mean? And where are we today? Well, we need to focus on what we can control. That means cash flow spending, ensuring that there's something less risky for income flow, and maybe rejigging things if your plans have actually changed. We need to also focus on how we react. That includes both the positive and the negative. Emotions can be strong when you're seeing crazy headlines, and especially when we're seeing negative headlines and losses. We actually feel the pain of a loss twice as much as we feel that appreciation of that same gain. Our natural reaction is to run. But in reality, the market is expressing its emotions when we see these extreme changes. That stock didn't just lose 20% of its value. It did on the market, but it didn't in reality. So while selling and cashing in might seem the best solution in the short term, it's hardly ever works unless we can absolutely plan when to get back in, be able to manage the loss of income flow during that timeline and time it absolutely perfectly. Because usually some of the biggest gaining days are right around the same time as the biggest losers. It makes it almost impossible to measure or time this precisely. What I do know now is most stocks have repriced and are now at fair market value or even below, according to most analysts. I also know that the market is currently reacting to extremes that we're seeing. So sometimes that means it gains momentum in the down direction and that pendulum can overswing. Inflation is likely near its peak. And in fact, most analysts appear to see it slowing because steps are being put in place at the moment. But that's not yet being reflected in the market pricing because they want to see if it works. When interest rates rise, we actually do see higher inflation. And that means it brings on more volatility for almost everything, including fixed income, which is a bit more unsettling even than the equities. But really the winners are assets that can keep up with inflation, commodities, real estate, equities that can manage their pricing power. In fact, charts that can help us can be shared to understand how they all do after interest rate hikes. And generally, it's the best place to be. Even though in a 3-month period we see volatility, if we look for 3 to 5 years, we know we need to be in those assets to keep up with inflation. The hard part, it's not a smooth ride. I don't know if we're at the bottom, I just know we're close. And I don't know how quickly recovery comes. But I know those 10-year charts that always look rosy, with that little dip that seemed like small, it doesn't feel small when you're in the middle of it, and we are. So living day to day, we have to be able to manage. So I want to leave you with a quote by Peter Lynch. Far more money has been lost by investors preparing for corrections or trying to anticipate corrections that has been lost in corrections themselves. There isn't any perfect way to invest. The best way forward for you is one where we determine the course for you, what you need, and ensure that you can live with the swings in your portfolio along the way. When we manage things according to your own plan, don't get caught up with the neighbors or the headlines. We usually increase the chance of meeting your goals consistently. And that's what really counts. If things have changed, call us. If you need help managing what's going on, reach out. We want to meet with you. We want to help. We can't manage the markets, but we can manage how we react to them. Thanks. Have a good weekend.